Breaking news just minutes before we were about to hop on. Credit Suisse is actually going to borrow $54 billion from the Swiss National Bank. All of a sudden last week, we not only had the second biggest banking failure in US history with Silicon Valley Bank, but in the span of the same week, we had the third biggest banking failure. And so now it seems as though the dominoes keep falling. And this contagion risk is something that's increasingly more likely, especially considering what's happening with Credit Suisse all the way in Europe. I mean, Credit Suisse is one of the biggest banks in the world. They've also been on a roller coaster from a stock perspective. The stock actually fell quite a bit after Saudi National Bank, Credit Suisse's biggest backer, said that they would not provide them with any further financial help. Credit Suisse and several other European banks were halted today in trading from the fallout of SVIB and from this news around the Saudi National Bank. Much of it has bled over to the US. I mean, JP Morgan, Goldman, Wells Fargo, Citigroup, Morgan Stanley, all of them were down today. And a lot of it was due to Credit Suisse and the European banks being down. And again, full circle back to Silicon Valley Bank. I just want to point out, since we're talking about the wider contagion, the breaking news just minutes before we hopped on, the Swiss National Bank is bailing out Credit Suisse, $54 billion that they're going to borrow. Credit Suisse actually released an announcement about 30 minutes ago saying, quote, "These steps will support Credit Suisse's core business and clients as Credit Suisse takes the necessary steps to create a simpler and more focused bank built around client needs." Really interesting, and I mean, we might see a massive green day for Credit Suisse tomorrow because essentially you're getting a bailout from the Swiss National Bank. Tannor, what do you make about this around the wider contagion?
I had a couple thoughts all throughout the day whenever I was reading about this. First, whenever the Saudis had denied any more funding of Credit Suisse, I originally thought, okay, not a big problem. You know, the president actually came out. They said they own around 9.2% of Credit Suisse. They don't want to go over that 10% mark because then that leads them to all sorts of new regulation. So I thought, okay, well, this is more of a problem just for the Saudis. You know, they are just looking out for themselves, not actually worrying about Credit Suisse as a business. But then they actually lent the hand all the way over to Swiss National Bank. And then you're realizing that this $54 billion, that they actually need this for liquidity purposes. And then you start to get kind of worried. So now we're actually needing this for real reasons that before might not have been known early on in the day. What does this actually mean? One is that this is not just a free bailout. This is a loan, right? So this just makes Credit Suisse just a little bit harder to grow than if they didn't have this or they didn't need this before. So this is also going to hurt the banking industry. Is how many more businesses, just like Credit Suisse, are going to need a bailout like this? Yes, it is survival. And yes, shareholders will be protected just a little bit longer, but it means that in future, the growth rates that you're used to seeing for these large banks is definitely going to be less and less, as a lot of their new profits are going to be going off, paying off principal for a loan that they didn't quite need before this bank run.
The regulators signaled it perfectly, at least on the US side over the weekend, that there will be more regulations and it will be more scrutinous, and you basically have to buy in so that we can have this collective fund to comp whenever things like this do happen. Right now, it seems as though what started as a very contained issue in Silicon Valley Bank spread to FRC, spread to Signature Bank, spread to a couple of other smaller players, is now spreading to the likes of Credit Suisse. And I'm just wondering, what are the potential next steps here? Like, are we going to see bigger banks, one of the, big four or big five banks in the US, start to wobble as a result of this? Like, is that even a possibility just from bank run mentality as a whole? Or is it something that's still very much in the back of people's minds?
From what I could see, Credit Suisse had assets under management of around $2.1 trillion. Okay. That was for their full year of 2021. Okay. If Silicon Valley Bank makes news because they have $209 billion worth of assets under management, this is a 10x issue. So no wonder the Swiss National Bank had actually stepped in and go, no, we don't want this press. We'll actually put a deal down, because absolutely that would be a catastrophe. This doesn't mean it was actually going to step to that like Silicon Valley actually had. It could just be that they don't want to step into deeper waters, not an absolute drowning, if that makes sense. But still, it is scary to know that this is sort of happening. What I do see as a commonality is that every bank that has sort of had troubles has so far had SMB accounts or small to
Small
medium-sized
business,
business
yeah.
accounts. What we haven't seen yet is a consumer-facing only style business. This is where I still think, because we talk about SoFi a lot, that we are kind of a little bit in our own niche. Now, people think that because SoFi is small, that this could potentially come to us in some sort of major panic. What I want to see is also the deposit growth for Credit Suisse and actually compare that to SoFi's, because that's seeming to be the biggest issue here is liquidity. So if we can continue to hold up massive growth rates, we might be continuously guarded from any of these liquidity issues. Obviously, SoFi is holding a much higher fee to actually run our deposits, but it's seemingly a good strategy right now because this is where a lot of people are running to safety away from a lot of these companies that were paying lower deposit rates.
My main concern for SoFi is not necessarily in the ratios that they're keeping and how they're handling liquidity. It's more so in the short-term psychology of the masses. If people are just scared, they become irrational. And as they become irrational, all the logic that you throw at them, all of the facts that you throw at them, however factual they may be, cease to make a difference to calm them down. If more, especially bigger players, more influential players start to wobble, even if it is just rumors of a bank run, I think that that's going to trickle into a lot of players. SoFi is definitely probably going to see a share of that if this continues to escalate. What I do know is that SoFi has been doing their utmost to keep people calm. They responded with their lack of exposure to SVB through a tweet. They actually just released recently, I think yesterday, they released a wider blog post around how they're handling everything on their end. Anthony Noto bought more shares. They're doing everything they possibly can to just assure people that they're fine. My main worry is how irrational people can be during these times of fear.
Absolutely. Absolutely. And one of the things that, while you were saying that, kind of brought up a funny point is that all of these companies were coming out, SoFi being one of them, that whenever SVB actually went down, they said, oh, well, we don't actually have any exposure to this bank. The larger and larger the bank failure that we actually start to see, how many companies can actually come out and say they don't have exposure to Credit Suisse?
Right.
Not very many. And who's the largest buyer of bank stocks? Financial institutions, right? So they're all kind of interconnected. So once one of these drop, it actually makes it harder and harder for these companies to continue to hold together their own financial balance sheets. So Federal Reserve and a lot of these actual central banks are trying to step in now and go, everyone, let's calm the panic now. Let's show that we have tons of money in these banks to support any liquidity issues, because this needs to have a hard cut. If it's continuing past this, this is an international bank, but if it continues to happen even in the US, that's going to be a massive problem.
I'm sure regulators are going to come out and at least release a statement to address the Credit Suisse thing to ease fears in North America. I'm sure simultaneous to that, a lot more institutions are going to come out with their own statements around the exposure that they had to Credit Suisse and how that might be looking. Of course, like I said before, Credit Suisse is probably going to be soaring green tomorrow as a result of the Swiss National Bank bailout. I'm just trying to piece together where we go from here and what we could be looking forward to as potential indicators going into the end of the week.
Honestly, I need a crystal ball to actually be able to predict that. I wasn't expecting this Credit Suisse news in the first place because everyone was saying that the largest financial institutions were protected. And then you're realizing that one of the largest institutions is still having a massive, massive problem here. Is that going to be the same? I know a lot of people were saying that Bank of America might have a lot of unrealized losses, right? If one of these types of players actually drop, that'll be very scary news. But now we have the Bank Term Funding Program to actually also help with that backstop, make sure that nothing worse actually happens. But in terms of what happens next, I mean, we're just going to have to keep following the news. And I don't actually know if I could predict anything. All I can say is that I'm trying to make sure that my money is safe in the very select players that I want to choose. I'm not actually picking a lot of bank stocks right now, as I'm still worried that there might be some shareholder pressure, not actually deposit pressure. As we know, the depositors will be fine, but as a shareholder, there still could be a lot of capital lost.
By the time we have our SoFi Weekly podcast on Friday, there's going to be another shoe to drop, I'm sure, because this situation, it seems as though it seems crazy, the pace and the magnitude of these pieces of news that are coming out. As always, Tannor covers all of this on his channel. He's been doing a great job with frequent uploads, which I definitely cannot manage that frequency. An incredible amount of detail on this entire situation, starting with SVB to Signature Bank to the Bank Term Funding Program and First Republic Bank. So definitely follow him on his channel.
I'm just saying that I'm on vacation, so what better to do than look at the banking financial collapse in the United States and internationally, right? So
the world is burning and Tanner's in Florida.
Yeah. So. Yeah, covering it all for you guys. I mean, what's there better to do? What am I going to play golf all day? Come on.
Yeah, that's fair. All right, I think that's it from us. Thanks, Tanner. Appreciate it.
Thanks, man.